Welcome to Bears in Exile. Today is November 18th, and this is the weekend market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. And for this time, the NASDAQ and oil. It's a little extra there. And so away we go. I actually missed almost the entire market day today thanks to busy day at work. So, anyways, I'm glad that it's over, and I'm glad that the weekend is here. Here is the Dow, and we could have, you could look at this and say it's a little miniature shooting star, or it's a possibly gravestone doji. There's a little stub at the bottom, so it does kind of mess it up, but regardless, or you could call it an inverse hammer. In any case, it's not that strong of a candle in the position that it's in, and since we're going in to test the bar, having some sort of a small reversal as the bar holds it is completely natural. What can we see today? Well, we still have the middle Bollinger Band above the short-term moving averages. Short-term moving averages are pointing down, getting crossover and separation. Still have a little bit of room to move. If we have a big down on Monday, we could achieve a complete crossover and separation prior to entering the bar, which would break the bar down, or at least increase the odds of it happening. So that's nice. Still below the 200-day moving average. This wasn't the largest real body yesterday, but even so, you can see that we just about got to the middle point of that candlestick and backed away from it. There's maybe a touch of overshoot to that, but regardless, that's what it looks like to me, and that's nice. It does look bearish. Slight uptick on the CCI, stochastic still pointing down, 14-day RSI moving average still pointing down, uptick on the RSI, downtick on the histogram, downtick on the MACD. It is a bearish looking chart. We do have to have a breakout or breakdown from the bar, but regardless, we had said, I don't know, a week ago or whatever, that unbelievable. Okay. Phones. They should have an on-off switch that, like, turns off all phones everywhere. But, anyways, I was saying that a week ago we had said 11,400 was a good-looking target, which was the major price consensus level for this month based upon volume at price, and certainly I do believe we still have a very good shot at that. I guess we'll find out on Monday, and I'm sure that there'll be some NDEs over the weekend. Those will be fun. SPX ended with a little doji star. You can notice that we don't quite have full separation in the short-term moving averages prior to entering the bar, but nonetheless they are still pointing down, and if we do emerge from the other side on Monday, that will be really nice for the bears. We are getting close to the major price consensus level. It'll be interesting to see if it is able to hold or if it breaks. You can see us backing away from it today and yesterday, presumably because it is offering some sort of support in buying pressure. So seeing that break will definitely be really bad for the market bulls. Everything's the same pretty much as the Dow, except the stochastics are lower than the Dow. But other than that, everything is essentially identical. It does look bearish. On the NASDAQ, we normally do not look at the NASDAQ, but for fun, why not? The NASDAQ looks very bearish on the daily chart. We have broken through the bullish bar. We have a complete penetration by the fastest short-term moving average. We have the middle Bollinger Band line above the short-term moving averages, below the 200-day moving average, and coming in on the major price consensus level. So that'll be a really interesting test. Downtick on the CCI, Downtick on the stochastics, downtick on the 14-day RSI moving average, all kinds of room to move. Slight uptick in the RSI, downtick on the histogram, downtick on the MACD. Bearish looking chart. Which is not to say that all the time frames look bearish. I need to be totally upfront about all of that. Here in the 182nd most powerful time frame, stochastics are very low, 14-day RSI moving average very low, essentially everything low, and perhaps looking for a click up. So this is in conflict potentially with the daily. And it is the same on the Dow and SPX. So it'd be great to see them get locked down here for a little while, but we don't know if that's going to happen. So the VIX. All right. Yesterday we said we were not happy with the VIX, that it was a pretty pathetic showing, and yep, today confirms that view. We still have the middle Bollinger Band below the short-term moving averages that is bullish for the VIX. You'll notice also we went down, kissed the major price consensus level, and backed away from it, almost resting on it, but not quite. We're still above it. So that is a good sign for the VIX bulls as well. Downtick on the CCI, the stochastics are leveling out. 14-day RSI moving average still ticking up. Downtick on the RSI, downtick on the histogram, downtick on the MACD. Actually a side tick on the MACD. With any luck, we will have a retest. This will be the retest of the major price consensus level and the flatline bar, and we will bounce off and go on our merry way up. But that is not a sure thing, but certainly we have some indications that it very possibly could be. XOI, we used to look at this one almost all the time, but it was so similar to the Dow, and that kind of stopped because it was repetitive. But since the Dow is doing its own thing, really, how about a little extra? Middle Bollinger Band line above the short-term moving averages. We do not have complete crossover and separation prior to entering the bar. We are just getting to the bar. We have a essentially an inverse hammer going into the bar. We are below the 200-day moving average, and you'll notice that we are testing the major price consensus level. If that is broken, oil is going down, and it's probably going down a good bit too, way down here to the previous month's major price consensus level here at 1130, or this current month's lower price consensus level down here just above 1100. CCI slight tick up, stochastics, fast stochastic getting low, slow stochastic still has room to move. Downtick on the 14-day RSI moving average, plenty of room to move. Uptick on the RSI, downtick on the histogram, downtick on the MACD. Not a good looking chart. But intraday time frames are not as bearish as the daily, so something to keep in mind. TNA. Alrighty. This one is still encouraging. We did get a slightly lower intraday low, which perfectly lines up with this other low that we had previously, and we are just above the major price consensus level for this month. You can see that the short-term moving averages are busting out of the bearish bar, which should be helping it actually. Middle Bollinger Band above the short-term moving averages. Downtick on the CCI, the stochastics, the 14-day RSI moving average, the MACD, and the MACD histogram with a slight uptick in the, or actually a real uptick in the RSI itself. So, pretty key level. And the previous month's major price consensus level, we pierced it but did not close below it. So having some resistance here is perfectly natural, and we want to see it broken. If we do, potentially we could be going to the lower price consensus level of the previous month, just below 37, or the lower price consensus level for this month, currently just above, actually not just currently, it will be this whole month, just above 34. And if those were to break, then yes, we do have the current low to test, and that would be really awesome. But just like, even though this is bearish, bearish chart, and we do have a hammer at the end of today, miniaturized hammer, the intraday time frames are not bearish like the daily is. So, something to keep in mind. UUP, oh yeah. We were saying how getting the bounce off of the flatline bar was a very bullish sign. Still have and it's turning out to be correct. We have an ever so slight downtick today if we blow the heck out of this chart. It was not met intraday. Still had a little ways to go, so we're going to have to watch and see if we get a bubble corrective move on UUP. But for the most part, all the short-term moving averages still pointing up except for the downtick, the fastest one. Middle Bollinger Band line below the short-term moving averages, downtick on the CCI, stochastics very high, uptick on the 14-day RSI moving average, downtick on the RSI, uptick on the MACD, downtick on the MACD histogram. So the daily here does look a bit iffy. And if we go into the 180, we can see that we're doing a reset. We have a slope down on the histogram, again the bearish cross on the MACD, downtick on the RSI, the stochastics, looks like the 14-day RSI moving average is rolling over, and a side tick on the CCI at the end of the day. So this also lends credibility to the idea that we need a bubble corrective move on UUP to reset the daily. Beyond that, if we go into the 60-minute time frame, we can see that that is also fighting 14-day RSI moving average pointing down, stochastics starting to point up, uptick on the CCI, downtick on the RSI, side tick on the MACD, uptick on the histogram. So we do have a bit of a jumble, which would explain the need for a bubble corrective move. That is completely fine, and if we get that started on Monday, great. And if it just wants to keep going up, that's great too, but still, it looks like that is required. That would reset the stochastics down to meet up with the 14-day RSI moving average so they can continue their ascent together, which is typical. You know, we did not get it back here. We've talked about it in the past, and we were expecting it. Did not happen. We didn't know if that would be the case this time on the march up, but that a reset of the stochastics would be entirely normal. All right, FXE. Very nice. Just like UUP, we have a slight uptick. Uptick target has not been met intraday. Still have the middle Bollinger Band line above the short-term moving averages. Still below the lower price consensus level. It did challenge it today and did not close above it. Uptick on the CCI, uptick on the fast stochastic, downtick on the slow stochastic, downtick on the 14-day RSI moving average, uptick on the RSI, slight downtick on the MACD, uptick on the MACD histogram. So, certainly looks like we could have a bubble corrective move. We are not going to know until later. GLD. Okay. We have a miniaturized inverse hammer going into the bar. We do not have complete crossover and separation prior to entering the bar, meaning that the odds are lessened that we are going to have a breakthrough and breakdown. But it's not like the bar is in the strongest position that it is. We do not have great separation of the bar, similar to back here. So that is a factor to consider. If we are going to break through it, our first stop is 164, the upper price consensus level. Downtick on the CCI, downtick on the stochastics, slight uptick on the 14-day RSI moving average, uptick on the RSI, downtick on the histogram, downtick on the MACD. So to me, even though we have the stochastics pointing down and we have had this drop, until we get the hook on the 14-day RSI moving average, I'm not going to be overly bearish on gold, and especially with the global situation in particularly Europe. But if we do get that hook on the 14-day RSI moving average, then I will start to worry about gold. SLV. We have a little spinning top. It did manage to close above the major price consensus level for this month. We don't have any upticks on the short-term moving averages, but they do seem to be slowing down, which is fine. Middle Bollinger Band line is still above the short-term moving averages. We do have the hook of the 14-day RSI moving average, not a good sign for silver. Stochastic still pointing down, uptick on the CCI, uptick on the RSI, downtick on the histogram and the MACD. So that this one has the 14-day RSI moving average pointing down is a definite concern for me. But who knows? I'm sure that we're going to get some NDEs over the weekend, and it'll be interesting to see how those play out. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.